Okay, welcome everyone to the FX Market Insight for Monday, the 20th of April. All right, now just starting the markets, we've just had, about an hour ago, I guess, the Kiwi CPI numbers. Now, this is a bit of a precursor to, we've got a few CPI numbers coming out this week, Canada and the UK. Now, strong numbers. I'm not surprised to sort of see that, especially with the fact that a lot of stimulus measures are already out there and people are spending. Right, so it's doing exactly the job it should do. My question is, if this all sort of resolves itself reasonably quick, then there's going to be so much stimulus in the markets, we could have a huge inflation surge. But we're a long way off that. Now, starting the week, Monday's markets notoriously thin. Okay, as the traders globally, European and North American traders obviously still on Sunday. The Asian traders trying to work out what's going on with the news and where it comes into play. Now, the good sign is, I think this stems from Friday. We are seeing a good uniform dollar move. Okay, the dollar pairs, where the dollar is the base currency, going up, and the other pairs going down. Now, this is to me, it's a first sign of sort of normal trading activity. But if I just bring you back across over to the charts, now that's all well and good that we've got good activity. Then you start to look at the charts and you start to see where we were left with last week. Now, it's a bit of a mess, if anything, or indecisive markets themselves. Now, what we have is a situation where a lot of the currencies now have come back into the range themselves. Okay, so so what we need to do is just is basically redraw your trend lines, okay, to start the week. So if I just come back into, where's my mouse? All right, let me just clear those charts. And it's a matter of just, especially after a couple of days where these currencies have actually, just grinding sideways up and down through short-term trend lines, is just adjusting your trend lines to the start of the week. We're seeing this across the board. Obviously, the Kiwi CPI numbers, we saw a spike higher and then it sort of just came straight back. I'm still expecting the US dollar to surge higher as we go through, as this thing drags out. We had a bit of a dollar weakness halfway through last week, but as you can see, it's a pretty quick process to redo your charts. Okay, so, and you're just finding the highs and lows. I'm not at this point really determining whether these things are going up or down. It's a matter of just getting your trend lines tuned into the recent highs and lows, and then we can make odds and ends of it. So right at the moment, if you're looking at the overall aspect of what we've got, currencies are sort of basically trading sideways just at the moment. So there's not too much to think about right there. You're looking at the currencies. The good thing here is, as I was sort of just mentioning, right, you come back to the dollar sort of page. This frame of reference here, where the currencies are all doing, or the US dollar is doing the same thing across the board, is a really good sign. So when you come back to your charts, you're like, okay, so we've almost got a bit of a neutral phase just right at the moment. But the good thing is we have, support and resistance levels on pretty much all of the major currency pairs. Kiwi's just topped out, but you look at the rest of them, we're going to have opportunities to trade. What we need to be able to do is identify, is the dollar going up or down, basically. All right. So the rest of the markets, the European, the Asian, Canada, are all basically following that the dollar trail. And if you come back over to the news, this is the thing you got to be wary of on Mondays, is just having a look at, what's come out over the weekend. I wouldn't expect you to sit in front of the screens for any length of time. All we're looking and I've got these news pages set up on all different news sources, right? So if I just show you that, okay, up here I've just got markets, foreign exchange. Up the top I've got the central banks. Down the bottom here, I think it's just on the main news, and I've got world news over to the bottom right. So all I'm looking for is information about what's going on. We know that the currencies haven't really moved, so there's no real change in the whole profile of the virus over the weekend, which is a nice change. Obviously there's talk around the US and Donald, obviously the US being the epicenter of everything. I think Trump's is playing, it's a political play, right? He's saying, I want to open everything up, so everyone thinks he's a good guy. He knows that the governors won't be doing this, so it's just another ploy on his part. And then we're starting to work out if this thing starts to recede, what's going to be the impact on the equity markets? Obviously, they crashed on the face of it. So with all this stimulus in there, do they start to rally aggressively? At this point, it's a bit hard to work out, but that's what the articles will be talking about. Now, the one of the main things I've seen that you need to be sort of focusing on and is the look where oil is. It's $17. Now, this is going to be like have different implications for obviously the oil industry. Now, I don't know whether the Saudis and the Russians are trying to take out the US oil refineries who cannot operate at these prices, but we'll soon work that out. But I would expect, I'm looking for, when I look at the major pairs, I'm looking for areas where things don't sit right. Now, this thing here, you've got to think for all money outside of the virus, which is a situation we can't really determine where it's at, what phase it's at. But normal situations, dollar CAD rallies on this, and it rallies aggressively. So I know it's already in the 140s, but I wouldn't be surprised to see it up 100 points over the next day or so. That's worth keeping a very close eye on, and obviously CAD yen as well. Now, just now coming back to the daily trade routine. Right, I've just updated this. Let me just change the screen. Okay, we've had a bit of an update from Friday. Now, just coming into Friday's trading, one of the standouts for me was gold. So it was stalling. The thing was up. Seller breakdown through 170.0050. Now, that turned out to be a pretty nice move. And once again, just looking at this, right, you're having a look at the move here on gold. If I can just get that up. Now, I've just drawn this resistance line in today because it's where the current resistance is. If I just delete that, right, you're looking at the main framework here. This thing has got multiple touches, and I haven't been trading gold at all, but it doesn't stop me looking at the instrument, looking for an opportunity to potentially get into the trade. I'm looking at this. You got 1, say 2, 3. You can almost count that as 4, 5, say 6 touches, but it is running out of steam. Right? You see it here starting to trade sideways. To me, all we needed was a change in behind the scenes of this virus, news. Basically, numbers are getting less. They're talking about opening states in the US, these sorts of things. It's the sort of catalyst you need just to get into the trade. And the break trade is the no-brainer, right? If everything remains the same, or if something happens, it will only go down if it's good news related to the crisis. And that's exactly what's happened. And you see pretty much a nice move. The unfortunate thing was the price action, right, gets down to 1685, then back to 1700. I got taken out right at the sort of where I got in, just below 1700 there. And that was a bit of a pain in the backside, but you can see where the opportunities are. Now, coming into this week, all right, there's going to be a bit of a refresh on the actual watch list pairs and the active pairs. We've got a slight change here. Oil's broken down. The Kiwi, to me, still a sell on rallies. It's already touched this level and sort of come straight back off after the CPI numbers. And then you've got a bag of currency pairs in the watch list, which do have levels all over the place. The key things to be looking out for, well, I still think these macroeconomic fundamentals, right, are sort of inconsequential. Even what the RBA minutes or the governors say, I mean, they're just going to be talking the same sort of, we're going to help out as much as we can, blah, blah, blah. It's the same old thing. We are starting to get into some more employment numbers, okay? UK employment, average earnings. That'll be interesting to see what's happening there. And they come down through the week, okay, trying to piece together where you can get some traction. These CPI numbers, I don't think they're going to matter. Right, so not paying too much attention. Probably have a look at them, but don't expect the normal reaction on a CPI number like we usually get. And once again, if these jobless numbers, the weekly claims out of the US, even get better, as in less, then that's going to show us that things aren't as bad as what the media have banged into us for the last month or two. Just fear. And I've been thinking, well, this is really going to blow up. I haven't seen those numbers blow up yet in the US as anywhere near where I thought they would. So this could be a hell of a play out as we go through the week. So just have a look at the numbers and see what's going on. It's going to be more indicative of what's going to happen if this thing recedes. Like if CPI and like the Kiwi numbers as a general precursor, if these numbers are strong, well, you know what? The central bank's stimulus packages that they've put into the economies is working. That's great. That's a bit of a reinforcement of that. At the same time, as things start to play out, we're going to start to see a lot of these currencies bounce and the dollar come off because the central banks are going to have a hell of a job trying to unwind all this stimulus. So straight up, to me, Mondays, just keep your hats on and see where things play out. We do have a few opportunities, and I think we're going to see some good ones this week. All right, there we go.